Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be discussing a comprehensive problem which is related to the bank reconciliation statement chapter. So now when we talk about comprehensive problem, we'll be discussing both the aspects of it. That means opening balance as per cash book and closing balance as per passbook. It can be a favorable, it can be an unfavorable balance, anything can be a part of it. So let's go ahead with the illustration and figure out what do we have in this illustration for you and how exactly are we going to solve with this bank reconciliation statements. So the illustration has been mentioned down here. Let's read it out. On 31st of March 2010, cash book of Shankar Private Limited showed a debit balance or rather a cash book balance of 99,000. Now that there is nothing mentioned whether this is positive or negative, we'll consider this as a favorable debit balance. That means either debit balance of cash book or favorable balance as per cash book. 99,000 has been mentioned here. Let's go on to the next part of this statement. Adjustments were as follows here. A check of rupees 23,000 received from the customer and deposited into the bank had been dishonored. Now, entry for the same wasn't recorded into the cash book. This is the first adjustment. Let's go on to the next one. Check has been deposited into the bank, but it hasn't been credited. 89,000 is the amount. Now there is next item which has been mentioned here which refers to check issued. Now the check issued but not presented for payment amounted to rupees 29,000. Next adjustment refers to bank credited rupees 54,000 as dividends into your account. The next item refers here as bank charges 67,000. And the last transaction refers to direct payment made by the customer rupees 89,000. So all these adjustments have been already provided to us. We'll have to go ahead and figure out what is the balance as per passbook because the opening balance is cash book and the closing balance is passbook. Accordingly, we'll check if we flip the balances. That means opening balance as per cash book, whatever has been provided, if that is the balance as per passbook, what does the closing balance as per cash book comes in. So let's start with the first scenario where opening balance as per cash book is 99,000. Continuation of topic. So we've prepared the format here. Let's start with the opening balance. That means balance as per cash book. So the cash book is correct. Passbook is incorrect here. So the balance as per cash book has been mentioned as 99,000. So we have to add certain items in it. We have to subtract certain items in it. Now let's figure out what do we have to do here. So the first entry refers to a check of rupees 27,000 which was collected from the customer and then deposited got dishonored. That means this entry will be first reflecting in the books of passbook. But right now we are not dealing with overdraft balance. That's the difference. We are dealing with the favorable balance. That means now the question changes to where will be the second effect be. That is what we need to check. In case of unfavorable balance, you would have checked where is the first effect. In the case of favorable balance, we'll check where is the second effect. So in this case, the entry or rather this dishonor entry has been already passed in the passbook now and the second entry is supposed to be passed into the cash book. So now that this was deposited and it has been dishonored, we have to cancel it. That means subtract it. Now if you have to subtract it, it is related to the cash book right now, hence cash book is correct and hence minus, if it is correct then it will be subtraction again. So this will be on the subtraction side. So check which has been dishonored is 23,000 here which has been mentioned down there. Let's go on to the next transaction. Now a check has been deposited into the bank but it hasn't been credited which is 89,000. So now check has been deposited, so the first entry has already gone into the cash book. The next entry will be in passbook here. So if it is deposited in the passbook, it needs to be added there. So if it is supposed to be added, passbook currently is incorrect, so it will be on the subtraction side. So add, if it is wrong, then it has to be subtracted. So subtraction side, this amount will be mentioned. Now the next transaction will be check issued but not cleared, or rather check issued but not presented for payment. Now in this case, if the check has been issued, the first entry has been already mentioned into the cash book. The next entry will be into the passbook here. So when it comes to the passbook, it is supposed to be subtracted because it is an issuance of check, the balance is going down. So if it is subtraction, it is related to incorrect book, then you will be adding that transaction. So that amount will be added there. Now let's go to the next transaction which says that bank credited 54,000 for dividend or in terms of dividend. That means that much of amount was given as dividend here. In this case, the entry, or rather the first entry, has been already made into the books of passbook. Hence, or rather, the reason why this has been mentioned in the books of passbook is because this entry has been initiated by the bank. Now, in the next entry, or rather the next effect, will be into the cash book. Now here it is supposed to be added because this is a dividend that is getting collected. That means it is an income for us. So hence it is supposed to be added. Cash book is correct. Hence you will add this much of amount. So let's mention it in the addition side. Now let's go on to the second last transaction, which states bank charges 67,000. That means that much of amount is the bank charge. Now this transaction has been first initiated by the bank. Hence it will be mentioned into the passbook. Now the next effect will be into the cash book. As this is a charge, it is a subtraction. So as this is a subtraction, it is related to the correct book. Hence you will be subtracting that amount. So let's mention that in the subtraction side. Now the next transaction, or the last transaction, refers to direct customer or direct payment by the customer into your account. That means there's a direct transaction or a direct entry, credit entry rather, into your account by a customer. In this case, the passbook has been already updated because it is directly into your account. You are not updated because the cash book has no record of it. So in the cash book, it is supposed to be added because this is increasing your bank balance. Hence, addition, if it is related to the correct book, then you add it again. So hence, this transaction will be added there. So with this, all the transactions have been mentioned down. Let's total the amount first. Continuation of topic. Now, let's club the total amount. That means all the addition items will be clubbed and taken outside, and all the subtraction items amount will be clubbed and taken outside. So the total of all addition item gives you 1,72,000 as total, and the total of all subtraction item gives you 1,79,000. So 1,72,000, which is supposed to be added, let's add the opening balance, that is cash book balance, in it. So that gives you a total of 2,71,000, out of which all this amount for 1,79,000, which is subtraction, will be subtracted there. So the balance as per passbook is 92,000. So we figured out the balance as per passbook, which is 92,000. Now the next scenario that you have to do is, instead of the opening balance as per cash book being 99,000, let's put it as opening balance as per passbook being 99,000 and figure out what do we have in there. So now we'll be mentioning that the opening balance as per passbook is 99,000. That means cash book will be incorrect and passbook will be correct. Now let's go on with a similar illustration and figure out what do we have in here. Now the first transaction, that means 23,000 of check that was collected by the customer, and then we deposited into our bank, and then we got it dishonored. So that means this entry has been already recorded into the passbook first. The second effect will be going into the cash book. So that means this has been dishonored, it will be subtracted. As it is supposed to be subtracted, it is related to the incorrect book. Hence, you will do the opposite of subtraction, that is addition. So this amount will be added here. Now, the next transaction refers to the check deposited but not credited. That means this is first recorded in cash book. The second entry will go into the passbook, as we are dealing with favorable balances only. Hence, we are dealing with second entries, or rather second effects. So the second transaction will go into the passbook, whereby a check has been deposited but not cleared. That means in this specific passbook, it was supposed to be added as it is related to the correct book. Hence, we'll have to add it. So let's add this balance. So we've mentioned that amount here. Now, the reason why we are doing this is to understand whether favorable balance is one part or unfavorable balance is one part. We have already dealt a lot of question with regards to unfavorable balance. Now we'll be completely dealing with only favorable balance, or rather comprehensive problem of both favorable and unfavorable. But in case of favorable, if it is both the start point is cash book and passbook, what is the difference that happens is what we are going to check. Now we'll be hopping on to the next transaction to figure out what it is. Now let's go on to the next transaction and figure out what do we have here. Now the next transaction refers to check issued but not presented for payment. Now when this kind of situation comes in, check has been issued, that means a cash book entry has been already passed regarding it. The next entry or the next effect will be seen in passbook here. Now if the check has been issued, that means it is going to be subtracted. So subtraction, and passbook here is correct book right now. That means subtraction, correct book, you will add this transaction here. So let's add it here. So that means if it is subtraction, if it is related to correct book, that means we'll subtract that much of transaction. So let's subtract this specific transaction here. So that transaction has been mentioned. Let's go on to the next transaction and figure out what do we have there. Now, the next transaction refers to bank credited rupees 54,000 for dividend. That means in that case, bank has given certain entry and this has been initiated in the passbook itself. So the next initiation will go into the cash book. Here, when it comes to cash book, it is supposed to be added. Right now, the cash book is incorrect. Hence, opposite of addition will be subtraction. So that amount will be mentioned into a subtraction account. Now, the next transaction that we have to deal with is the bank charges 54,000. Again, bank charges, it has been initiated by the passbook. That means passbook entry has been already cleared. Second instance will go into the cash book. Now in cash book, it will be subtracted because this is the subtraction amount. So if it is subtracted, it is related to the wrong book. Hence, it will be added back. That means this transaction will be added again. So we have mentioned that transaction as well. Now the last transaction refers to direct payment made by the customer into your bank account. Here, passbook entry has been already made. That means the next transaction will go into the cash book. Now, as it is an direct payment made into your account, that means it is increasing your bank balance. That means you have to add it. In cash book, you have to add it. Cash book is related to incorrect book, hence you will subtract it. So this much amount will go into subtraction side. Out of this 2,78,000, you have to subtract the all items which are supposed to be clubbed in together as subtraction group. So that will be as 1,72,000, which is subtraction item. Now 2,78,000 is the total item and 1,72,000 is supposed to be subtracted from it. So let's figure out the difference here. So that gives you a total of 1,07,000 in total, which is the balance as per cash book. So this is how the difference between the opening balance and closing balance if interchanged reflects here. If you see the opening balance as per cash book was given earlier as 99,000, but if you change it to passbook, then it will give you an opening balance for cash book as 1,07,000. And respectively, this is how the transaction is supposed to be solved. So I hope the video gave you a clarity about how the comprehensive problem is supposed to be solved in case of favorable balance being given as a part of your question. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.